Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's July 6th. We got a bit of economic news releases to go over today. Tomorrow, of course, being the big one with the job numbers that the Bureau of Labor Statistics will be releasing. But today we have the ADP employment, which is typically released on the Wednesday, but due to the holiday, they push it off one day. So this is for the month of June. We had 230,000 new jobs created for the month of May. And the forecast for June was 180,000. It came up short at 158,000. Now, this is for the private sector. It doesn't always translate to what the Bureau of Labor Statistics comes in. But however, they do kind of like to look at this, kind of give us a preview of what potentially what the numbers, what the Bureau of Labor Statistics will release. Also, we got the weekly jobless claims that's always out on Thursday here. Last week we had 244,000 people apply for unemployment. Forecast was 248,000 for this week, and it came in right at forecast. So we've been starting to see this increase a little bit here. We were down the lower, we're in the 230s, I think, at one point, 240s. Now it's kind of rising up a little bit again. So something, of course, we want to keep our eyes on here. Now the next index is basically talks about the gauge for the services industry. We saw manufacturing recently, and now it's time for the services. And we'll start with the market services, flash services for PMI. We had anything on these two indexes, anything above 50 is considered expansion. Anything, of course, below is contraction here. And we had a May report came in at 53.6. Month of June came in up at 54.2, so better than what we saw for manufacturing. We had one report, I believe it was PMI, came in, dropped, and then ISM went up. But this week, as we can see, both of them are going upwards. So we got the ISM Services Index, or non-manufacturing index, it's also called. We had a 56.9 back in May. And the forecast is supposed to have a slight dip to 56.5, and actually went upwards. It went up 0.5%. To 57.4. So very nice numbers here overall. ADP, of course, disappoints with 158,000. And of course, we're starting to see jobless claims take up a little bit here. Right now, the stock market is down. It's taking a bit of a beating. It's kind of waving off more or less these data we just received, the economic data, and it's more a placement of the global yields. We kind of remember last week we had Mario Draghi made some comments that came in pretty hawkish, basically saying that, and this is kind of going to be a sentiment for a lot of other central banks around the world, basically thinking that they're going to be pulling their stimulus programs because it's getting to the point where a lot of them are improving. Their economy is showing some improvement. Some of these countries were facing deflation. Now that's kind of getting debunked. We're seeing inflation's in check. We're starting to see some progress in a lot of places. So as a result, we're starting to see here in the U.S., we're getting a lot more competition for those investment dollars. So as a result, we're starting to see the stock market come down. We even see, which we'll show again, but for a while there, we're taking a bit of a beating on the bond market, the mortgage-backed securities, because they're taking that and putting it into a place like our 10-year Treasury yields, where also the German Bund jumped up over double what it was. That was like around at one point a year ago, we were at negative on some of those countries. So like negative 0.2, I think it was. And then I think a matter of a week ago, we were like 0.22 or something like that. And now we're up pushing 0.5 right now. So it's kind of doubled in its pace right now because investors are starting to feel more comfortable with the comments made by Draghi that things are getting better in these areas here. So as a result, we're still getting this back sharp turn down here. We had a nice day. Yes, we got above the 100-day moving average, but again, now we dipped down below again. So we're kind of getting into a situation where we're below the 100-day moving average. We're down about 22 basis points so far this morning, and we're getting this star effect here, which is kind of getting at a crossroads where it's getting this. Basically, it's kind of confusion with investors. They're not really sure which way to go. If they should put more money into mortgage-backed securities, which you can see with here, or they're getting kind of indecisive is kind of what it really means here. But it's possible we could see this come down more as they put more money into the treasuries and these other yields, global yields here. And as a result, the rates are going a little bit higher right now. Now, last week we talked about this death cross, but as a result of these global yields, it kind of threw a curveball at us, and now that's kind of now basically it's kind of taking away that death cross that we were hoping to see some improvement in our mortgage-backed securities, to see some improvement in the rates. We may not get that now, or at least not in any time in the near future right now, as right now the yields globally are taking a front seat and getting receiving the most of the investment dollars here. So as a result, again, interest rates has gone up a bit today compared to where we were yesterday. Hope that helped you guys out. If you guys want to get more updates, just come over to Twitter. I'm at Mike Bjork on Twitter, and I do post updates throughout the day there. Also, if you guys are in the market for a mortgage, please feel free to reach out. I do help people with their pre-approvals and purchases, as well as those who are looking to refinance. Refinance deals could be taking money out of the property and doing a lot of different things, from, if you're an investor, repositioning and buying more investment properties. If you're looking to add on to your property, if you're thought about moving in because there's lack of inventory, people want to add on to their homes or renovate, to people who want to go from adjustables to a fixed rate as the rates are climbing right now, or even go from 30-year to 15-year fixes. All right, folks, you guys have a wonderful day. Feel free to, again, reach out, and thanks for watching.